CNBC-TV18.
Hello and welcome to CNBC TV18's Mumbai newsroom. I'm Sumaira Apti and you're watching Your Stocks. Let's invite our two experts for today who will be joining in to answer all our viewers' queries. Parthiv Shah, Director at Tracom Stock Brokers, and Kush Bohra, founder of kushbohra.com. So thanks to both of you for joining in. Our first query comes to us from Kamal Mirza, who is written in from Lucknow. He has 300 shares of Gail at 66, 100 shares of Polymed at 645. So for these two stocks, he wants to know now whether he should remain invested or he should sell his investments right now. So Kush, first to you. For both stocks, what is your recommendation?
Sure. First up, the stock Gail has actually done rather well for him, and despite falling off the recent highs of 110, 112, he's still in profit. It's trading very close to its long-term averages and supports of 85. So my suggestion would be keep a strict stop loss, and if it comes anything below these levels, just book profits. As far as Polymed goes, the stock is in a bit of an uptrend. Hold this with a trailing stop loss of 910. You can expect targets of about 1050 on this one.
Okay. Parthiv, I believe you don't track Polymed, so on Gail, what would you advise?
Good afternoon, Sumaira. So basically in Gail, I agree with the view that, one can hold right now because his entry point is somewhere around 66 levels. And at those levels, or rather, I would say even at 84 levels, I think the valuations are extremely compelling. No doubt there are a lot of headwinds being a public sector enterprise, despite the fact that Gail has the highest market share in terms of the gas pipeline network. And going ahead, the way I think the industries are consuming more of the energy in terms of the LPG and all these things, I think Gail's utilization levels are bound to go up. It's just that the marketing margins are kind of capped, so that's the reason that sometimes the earnings are a little lumpy. But otherwise, I think the asset that Gail possesses, I think the value of it is far higher than the current enterprise value that the share is quoting at. So I would suggest a hold, definitely worth keeping investment stop loss as well. And any rise near to 100, 110 levels, I think that would be the level to exit.
Okay, up next, we have a query coming in from Ludhiana. Bipin Agarwal has written in to us. He has 250 shares of Varroc Engineering at 435 and 75 shares of VIP at 700. Now, he wants to know which of the two stocks he can exit because he needs to raise some money. Kush, again, first to you, which one would you choose?
So this one's rather easy given the technical setup. Varroc's in a bit of a downtrend and VIP is in an uptrend. So if he has to choose between the two, Varroc is an exit at the moment. VIP, although it's below his buying price, the structure is largely intact, it's bullish. He can hold with a stop loss of 650. Here he can expect targets of 775 and 800 in the coming months.
Parthiv, you don't track Varroc, so would you agree with this to exit Varroc?
I do believe that, Sumaira, because Varroc has kind of struggled as a company. They are supposedly a big name in the lighting industry, and more importantly, they do had customers like in the European countries and even customers like Tesla, and they put up the international lighting division for sale. And what the market was anticipating, they didn't achieve that. So that was another disappointment. So yes, I do agree that exit Varroc, and VIP Industries, I think, should do extremely well. We know there's a travel boom. The revenge travel has been kind of extended, and players like VIP are benefiting. They're growing their volumes well, and now we are expecting even the margins to expand thanks to the fact that a lot of raw material input costs have started coming down. So suggest a hold on VIP Industries and exit on Varroc.
Okay. Up next, Jacinda De Silva has written in from Belgavi in Karnataka. She has 700 shares of Suntec Realty at 170 and 1,000 shares of Indian Bank at 87. She's a long-term investor and wants to know now what she should do, what should be her course of action. Parthiv?
See, interesting names, Sumaira, and especially we know for the fact that the real estate space has been buzzing well, and Suntec Realty has been a decent name. Their projects have been selling well, and the pre-sales data also are coming in well. They have very good land bank inventory, which can be utilized going ahead as and when the execution starts picking up. So probably I think, especially knowing the fact that real estate as a sector is doing well, and Suntec has a decent share in terms of the residential properties, and residential is the segment where the boom is a little more than the commercial segment. So that's where I would suggest a hold on Suntec Realty. And in terms of Indian Bank, I think what we would experience going ahead is a lot of improvement in terms of numbers from a lot of these PSU banks. And especially Indian Bank, I think, has been a lot more resilient than a lot of its other PSU banking peers. And going ahead, especially with a very high provisioning coverage ratio and the recovery rates have been very high, probably I won't be surprised if we see a very decent growth number in terms of loan disbursements coming from Indian Bank. As a result of which, we'll see better profitability, better NIMs number. So I think valuations are very compelling at 0.8 times price to book multiple, and I do believe there's a scope of re-rating here.
Okay, Kush, what about you?
So I'll differ from Parthi's view on Suntec. The real estate space per se looks very attractive, but Suntec's not been doing well for a while now, and it's close to its medium-term support of 380. Now, if it breaks, the stock could see further downside to about 350, 325 levels. My suggestion would be to exit from Suntec, switch to something like an Oberoi Realty. As far as Indian Bank goes, I agree. The stock is in a very strong uptrend. The volume action is also pretty decent. The investor can hold the stock for the targets of about 250 to 260 in the coming months.
Okay, up next, Kaustubh Bhattacharya has written in from Guwahati. He says he recently bought 50 shares of Tata Steel at 107 and another 50 shares of Ashoka Buildcon at 81. Now he wants to know what should be the target for both stocks. Kush?
Tata Steel has multiple resistance zones at 105, 111. So my suggestion would be to move out of Tata Steel just for now. If he wants to hold on, then have a very strict stop loss at about 98 levels. Otherwise, it's not a bad idea to exit from Tata Steel even at the current rate. Although it's just below, although it's a little below his buying price. But this would also be a good exit point. Otherwise, hold with a very strict stop loss of 98. As far as Ashoka Buildcon goes, the stock has resistances, but the trend is largely intact. Hold with a stop loss of about 73. The stock could see levels of 85 and 95 in the coming months.
Okay, Parthiv, what about you? What is the upside you see here?
See, I do agree. Tata Steel probably, I think, next couple of quarters in terms of the spreads that they earn might not be good, and no doubt the stock is pricing in a weak cycle. Then there are long-term triggers in Tata Steel, no two ways about it. But I think it's all about the entry points when we talk about any commodity cyclical sectors. And Tata Steel certainly has its share of cyclicality. And right now we are probably not in the best of the steel cycle, and especially with knowing the fact that government has levied in the export duties on finished steel as well. That is a huge overhang for these companies and their spreads, and it's kind of almost killed the export market, which has led to domestic supply increasing. So these are the headwinds that Tata Steel is probably facing, and that's the reason where I feel that probably one exits here, and only if one gets to see levels of around 85, I think that would again become good entry point for long-term investments in Tata Steel. Talking of Ashoka Buildcon, I think probably in the infra space one has to be very selective, because we know that these infra companies do tend to get a lot of order books. It's all about execution and how they manage the working capital. And Ashoka Buildcon has its share of ups and downs, and probably I would not rate it as one of the best executors. I think at this juncture, probably PNC Infra looks extremely good, and they are well placed in the road sector. The execution track record has been reasonably good. There's a lot of work happening around in UP, so that is where they have very strong presence, and that should always be beneficial to a local vendor. So PNC Infra would be a preferred bet over Ashoka Buildcon.
Okay, on that note, we are going to take a very quick break, but we have more stock queries to answer, and we'll do that on the other side. Stay tuned. Hi, welcome back. You're watching Your Stocks. Our two experts, Parthiv Shah of Tracom Stock Brokers and Kush Bohra of kushbohra.com, are with us answering all our queries. And the next one comes to us from Chennai. CJ Shrikant has written in. He has 50 shares of Supreme Industries at 1,050, and he has about 175 shares of Dabur, which he has bought at 370. Now he wants to know, should he book profits in both? What should be his way forward? Parthiv?
We like both the stocks, Sumera, frankly. And talking about firstly Supreme Industries, I think it's one of the best plastic processors in the country. And we know for the fact that the Taparia Group management, I think, has been fantastic in which, in the way how they've scaled up, garnered huge market share, created huge distribution ecosystem. And what we like about this company is their capital allocation policy. I think they generate fantastic operating cash flow, and most of the capex they do is from the internal accruals. I think it's a classic example where, on all parameters, the company tends to do very well, whether it is ROCE or ROE. And that's the key reason why this share has rewarded its shareholders over a longer horizon. And we still believe there's a long way to go for such players, because I think looking at the infra spend, capex coming not only from the government, but the state government, and now even improvement in the private capex, and also the housing market and the farm incomes which are improving, all of which could be potential customers for players like Supreme Industries. I think the volume growth is looking very good. So suggest a hold here. Talking about Dabur, I think we're expecting better numbers going ahead, especially in terms of not only volume pickup, but also improvement in the margins, because a lot of raw material input costs have started coming down. Even the packaging cost, I think a key component has started now coming down. So I believe that Dabur going ahead should report decent set of numbers in terms of volume growth along with margin expansion. That would be, I think, very good in terms of further improvement in the stock price from here.
Okay, Kush, what about you?
Well, agree with Parthiv 100% on both these stocks. First up, kudos to the investor. I mean, he's making fabulous profits on both of them, and both the stocks look in a very strong uptrend. Supreme Industries, he can hold on for a target of 2,500 in the coming quarters. As far as Dabur goes, as Parthiv's mentioned, there has been some challenges as far as the results go, and that's reflected in the price. However, the stocks, trying to find, support levels, and for the last few sessions, it's been holding on to that. Since the view is long term, we don't see any major corrections or any major changes to the trend. This can also be kept in the portfolio. We see targets of about 650 in the coming quarters on Dabur.
Okay, up next, Zahid Furniture Wala has written from Surat. He has 15 shares of Craftsman Automation at 1900, and he has 30 shares of Bata India at 1385. Now he wants to know, whether these companies are likely, or rather, I should say, these stocks are likely to move higher, or have they peaked? Kush?
Well, I think there is a lot of room in both of them. Slightly different stories in two stocks, but both of them have an upward trajectory. As far as Craftsman goes, the stock has been in an uptrend and has not seen any kind of reversal or any kind of changes in the pattern. However, it's resisting around 2,900 to 3,000 zones. But that's all right, because it's come after a very sharp run up from 2,000 levels in June. So a bit of consolidation is warranted. I suggest hold on to Craftsman for targets of about 3,300. As far as Bata goes, the stock has been doing fairly well. It's seen a bit of a correction recently, but otherwise nothing much to worry. The stock's taken support at around 1,700, 1,750 levels and then resumed its uptrend. This can also be held, kept in the portfolio for a target of about 2,200.
Okay, Parthiv, what is your opinion?
Again, Sumira, Craftsman Automation being in the auto ancillary space is buzzing and doing extremely well. I recollect probably the company had come out with an IPO at a price band of around 1490, and from that the stock has almost doubled and richly rewarded the shareholders. And even here, I think looking at the way the company has expanded its capacities, and more importantly, I think the key relationship it shares with a lot of the OEMs, I think the going ahead, the company will do well. If I had to talk on the valuations, yes, it is quoting at around 22 times. But if I look at the margin profile of this company, I think it's pretty healthy. They deliver OCs of almost 18%, ROEs at 15%. So it's a pretty good auto ancillary name. And because the theme is buzzing, and more importantly, the demand scenario looks good, the capacity utilizations are on the higher side, I would suggest a hold on Craftsman.
Okay. Shyam Mehta from Pune says he has 100 shares of Apollo Tyres at 128 and 300 shares of Bank of Maharashtra at 20. He's a short-term investor and wants to know what he should do at the moment. Kush?
Sure. Apollo Tyres has broken out of a medium to long-term resistance zone of about 240 levels, and has seen a breakout and is continuing that uptrend. Now the stock has seen the volume action also pick up and is trading very comfortably above its averages. Here the stock can be held on to, retained. In fact, they can also look to add some more because the stock has actually corrected just a bit from its high. So this could actually be a good entry point also to add some more stocks. Here, the immediate target would be around 320. If you're looking for a trailing stop loss, then 240 is a good level. As far as Bank of Maharashtra goes, that the stock is also in a bit of an uptrend, although 20.5, 21 zones are a bit of a resistance. So I would look to exit at cost because 20 is the buying price. I would look to exit at cost. A better investment or a trading bet would be something like a Canara Bank or a Bank of Baroda if he's looking to invest in the banking space only.
Okay, gentlemen, thank you very much to both of you for joining in and for answering the queries sent in by our viewers. But before we wind up on the show, we'll bring you the latest from the Congress presidential elections. Veteran Congress leader Mallikarjun Kharge has been elected as the new Congress party president. My colleague Parikshit Luthra joins in with all the details. He's live at the Congress headquarters. Hi Parikshit, what's going on?
Well, yes, as expected, Mallikarjun Kharge has won with a almost 90% majority in this election. The electorate was roughly around 9,400 votes, and 10% or 1,072 votes have gone in Shashi Tharoor's favor. Shashi Tharoor has congratulated Mallikarjun Kharge and said that he would like to work with them, work with his team very closely, and the Nehru Gandhi family will always hold a very strong place and big place in the hearts of Congress workers. A lot of celebrations here at the Congress headquarters where we are right now. Many, of course, would say that this was a foregone conclusion. Wherever Mallikarjun Kharge had gone while campaigning in this election, he had got a bigger reception than Shashi Tharoor. And this is exactly what Shashi Tharoor had been saying as well, that this is not a level playing field. In fact, members of his team had also alleged voter fraud in this election. But of course, they took back those complaints in the run-up of the voting process. So now that he has been elected, let's see what changes. What is the amount of freedom that Mallikarjun Kharge really has? Because the G23, the group of dissidents within the Congress had been asking for major change, major reform in the organization process. So let's see how much reform actually takes place. But Mallikarjun Kharge is believed to be a strong loyalist of the Gandhi family. The 80-year-old former railway minister is someone who has been backed by the Gandhi family in this election. So many also believe that the status quo will continue, but this was a big demand of a bulk of leaders in the Congress, that there should be an election, there should be a full-time president of the Congress party. Back to you.
All right, Parikshit, thanks very much for bringing us those details. With that, we're going to wind up on the show, but do remember to keep sending us all your queries and we'll take them up with our experts through the week. For now, stay tuned. The team of Closing Bell joins you next.